Hello and welcome to the Wealth Masters Talking Points, where we help ordinary people become savvy and informed property investors through specialized trusts. Now, each week we bring you informative content on our products and services, as well as helping you to understand what you need to do to make sure your investments are safe, secure, and working hard for you. Now, our principles are based around using other people's time, skills, and money. And speaking of skills, today we are joined once again by our tax expert, who'll be delving a little bit deeper into the tax implications and the difference between maintenance and repairs on your property investment. So to talk a little bit more on this point, I have Cassie Henning joining me. So Cassie, thanks so much for joining us.
Hi, thanks, Damien. Thanks for having me.
Now, Cassie, can you just explain to us the difference between repairs and maintenance, as well as improvements on an investment property?
Yes, Damien. I think a lot of people get confused when it comes to repairs and maintenance and improvements. So I always tell my clients, listen, whenever there was something on the property, there was an oven, there is a floor, and you have to do a little bit maintenance repairs. That is repairs and maintenance. That's typically will happen in your income statement once a year. You can deduct it. If it's a rental property, you can deduct that expense. So painting is a repairs and maintenance. If the geyser bursts, that's repairs and maintenance. Improvement is something that you add to your property. So SARS always say it must not have been there actually. So if I put paving around the house and it increased my value, then absolutely yes, it's an improvement. If I do put up a carport, for instance, that's an improvement, a capital improvement, and that does not form part of your income and expenses for that current year. That form part of the base cost of your property.
Now, Cassie, a question we've had is, if the improvements cannot be deducted, what is the actual benefit thereof? Does it not sort of put you in a worse position when you're selling your property at a later stage?
Well, that's the nice thing. Whenever you buy a property, you buy it at a purchase price, which is your base cost. But whenever you do capital improvements to your property, that gets added to the base cost of the property. So if I bought for 500 and I did 100,000, now my base cost is 600,000 Rand. And when I sell, the capital gains tax is not worked out on the 500,000, but rather on the 600. So it's not all loss. It's definitely improvement is what it says. It's an improvement on your property and it increases your base cost, so that at the end of the day, whenever you do sell, and we're not in the market of selling normally, but then your capital gains tax will be less.
Now, Cassie, can you just talk to us a little bit more about a property generating income and what that actually is?
Okay, so whenever you have a property that earns an income, expenses is allowed. I know a lot of people ask, can I deduct property expenses against my primary residence? No, because there's no rental. So the secret is whenever there's rental or an income, you can deduct the expenses. So the income of a property can either be the rental income that you receive monthly, or as in the wealth mastery system, they can get that capital out that they can also use to buy new properties or do what they want to.
Now, Cassie, you mentioned that the repairs and maintenance cannot be deducted if it's within your personal residential property. What if a property is in a trust? Does it still need to be earning an income from that you don't actually, pay yourself?
Yes, so whenever there's no rental income, so as I said now, the income is very important. So let's look if there's an income. So we trading with rental, and that allows us to deduct the repairs and maintenance. So on a primary residence, even though it's in a trust, if there's no rental income, and some people do have rental incomes on their primary residence, like a flat or whatever, that can then be deducted per portion. Say, for instance, the repairs and maintenance done to a flat on a primary residence that receives income. But whenever there's no income generated, you can't deduct that expense.
Fantastic. Cassie, thank you so much. We kept it nice and short and sweet today because there's quite a lot of information that we need to take in, but we really appreciate your insights and knowledge. And I'm sure it goes a long way to help clarify things a little bit better for people to understand the difference and see where they can get that tax benefits. Now, if you at home would like more information about how to do things the Wealth Masters way, or even what is the Wealth Masters way, then make sure you use the link in the description below to register for our free online training, which is taking place this weekend in both English and Afrikaans. And you've got the whole weekend until the end of Tuesday to stream that. So you can watch it in sections, watch and rewatch, make all of your notes, and then we'll help you further along your journey from there. So if you'd like to register and also find out more about the Wealth Masters Club and get more of our newsletters, we will also have a link in the description below to sign up for our membership. And that's it for today. Thank you so much for listening and joining us. And Cassie, thank you so much for taking the time to help us understand a little bit more.
Thank you. Always a pleasure.
Cool. Until next time. Bye-bye, everybody.